what's up? Welcome to our first episode of TaxSnax,
where us non-tax experts talk to our tax experts for you guys and for ourselves so we can all be a little bit more informed.
And just to be sure and just to be certain, we're just as uninformed as you guys. We have no idea what's going on ever. So I always wondered, why do all these people have G-Wagons? Turns out they put it on their LLC. Turns out you can't just be doing that. You can't just be doing that, y'all.
And that's why we spoke to Alicyn and Cecily, and they told us what you can and cannot write off on your LLC, how to form an S Corp, what even is an S Corp, when you should and shouldn't make S Corp. Have I said S Corp enough? I don't think so. S Corp.
Tell us what an S Corp is, Scaly.
You know what? That's what good old Google is for.
Good old Google and good old Cecily and Alicyn. So we're going to move on over and welcome to our first episode of TaxSnax at Amalfi Pizza in downtown Atlanta. All right, hey guys, I'm Enya Spicer.
And I'm Kaylee Clemens.
And we are with...
Hey, Alicyn McLeod, Atlanta tax advisor and financial planner.
Cecily Welch of Cecily Welch CPE, the accountant that you can understand.
And we are here with our first episode of TaxSnax at Amalfi Pizza
in Atlanta.
So with all the misinformation on social media, what is one of the craziest things that you have heard about tax or financial planning that is just absolutely not it?
You want to go first? You want me to go first?
I'll let you go first, Alicyn.
Okay, so I am like the queen of unneeded S Corps. Like, stop it. Stop with the S Corps that you don't need. They aren't for everybody. You should work with a professional tax person who can do an analysis of your specific situation to see if you really could benefit from one. If not, it can be very expensive for you to do initially and then take care of annually. You may not even realize you're not getting any tax savings at all. You honestly could be in a situation where you overpay taxes because of that S Corp.
I have to give support to what Alice said regarding S Corps. We hear frequently, well, that's the best entity type. If that's the best entity type, why are they have different types? There must be a reason.
Thank you.
So all the online sources, etc., you are right. You can create a lot of stuff. The IRS lets you get into everything easily. It does not let you get out. You see. So you can do it. What should you do? That's what you need a professional for. That would be an S Corp. Now, what are the craziest things that I've heard? I would think the most common misconception is, well, I get to write it off. When people have a business or they create a business, it's a business expense, right? Sure, but that doesn't mean you don't need to spend the money. Do not spend $1 if you save 30 cents. That means, yes, it may be a business expense, it may be deductible, but if it is not necessary, just because you get a tax deduction for it, does not mean that you should do it. You still need to make intelligent, informed thoughts process of whether or not I need to make this expenditure, whether or not I need to make this donation. Yes, in the end, maybe it's deductible, but you still need the money to pay for it.
Yeah, I definitely think that, I don't know about you, at least for me, I assume you write it off.
Yeah.
I mean, I think that's all. We're not tax experts, so all you hear is you write it off, you write it off, you write it off.
I definitely have said that many a time. My mom and I have a small LLC, and I say, that's steak dinner, let's just write it off. It's fine. We talked about business for 5 minutes.
And hey, that is very well valid. If you did work, it is a business expense, but it is an expense.
Right.
So we're still spending $1 to save 30 cents, maybe 35 cents. Whether or not you need to spend the $1 is the decision that we need to make. And then whether or not it's deductible.
Yeah.
It's there's so many things that happen to be that I think are fallacies in regards to tax law that comes up. There's so many things in tax law that are supposed to encourage and discourage things in the economy. There has never been a business ever, small, medium, large, that decides to make an expenditure because of tax law. It might decide where that expenditure goes, but whether or not they hire someone has nothing to do with tax law. It can be afford to pay them, but you could have the sales and reward. not who I hire. Hey, tax law says I should hire a veteran because I get this tax break. Maybe, but whether or not they hire someone is still all about the economics of running a business. It's not driven by tax.
I feel like I'm like I've just been thinking things that aren't real this whole time. What were you going to say? I did not mean to interrupt.
Well, I was going to expand on what Cecily was saying, that, yeah, make sure that what you're spending money on is what your business actually needs to run, but also be aware that sometimes even so, you're not necessarily going to get to deduct that in full or all at once, potentially. Yeah, maybe your business does need a new car, but if there's personal use of that car, that personal use lease isn't deductible. So the folks out there saying, you know, that you should spend $100,000 on this new car, but you're an attorney and you work from home. Okay, come on now. Like there's little to no business use of that vehicle. What are you going to get to deduct? Probably little to no amount of the money that you spent on one car.
Okay, so bouncing off of that, one time I heard that if I wrapped my car and like 50% of it is my business, right, advertisement, can I write my car off?
Alicyn, shall you take this or shall I take this one?
Go for it.
What you have done is created an advertising expense. You have not created a car that is now write-offable. A big urban myth is I get to write off my car.
Right.
You get to write off your car assuming you are using it for business. Using it majority for business. Generally speaking, that means over 50%.
Right.
How do you know you're using your car over 50% for business just because your business pays for it? You still have to track mileage. There's no way to get around that. Wrapping the car, buying it in the business's name, et cetera, doesn't override substance over form. You still have to be using it for business. Otherwise, what you got is a very nice advertising expense, the cost of the wrap.
Right. Oh, man. That makes sense. Okay.
And there's specific rules that are for specific types of assets.
Right.
I like to use the phrase, pigs get fat, hogs get slaughtered. Saying that to say, tax law is written for business to do what they need to do. You write off necessary and usual and necessary business expenses for your business. However, when there has been a history of abuse, the tax law will take that into account and close all those things. That is why things like a cruise is not a business expense. It just simply is not. I don't care that you've taken your entire company there. It should be, but because that's one of those things that's been abused. Vehicles, boats, things like that are areas that there's been abuse. So there have been some hard and fast rules that are just in the tax law that you do, as Alicyn was mentioning, really want to talk to someone who does it for a living and at least cautions you, like, hey, let's figure out what the current tax law is for that particular type of expense, that particular type of asset. Is that a fair statement, Alicyn? You would agree?
Talk to a professional before you make the big purchase.
Before I wrap my car in bright pink.
So
Can I give an
shouldn't,
example?
Shouldn't, yeah, absolutely.
Yeah.
Before I went on my own and was working for a larger firm, part of what my firm does, I've decided to kind of change the billing structure because I had an incident where there was a client who literally lost, and I know this number off the top of my head, $665,000 of a charitable tax deduction. When you talk to a professional after a transaction has occurred, we can just tell you what the tax impact was. We can't impact it to change it on the front end.
Right.
The transaction that they executed, the professional that they were working with, an attorney, an investment broker, said, hey, be sure to talk to your CPA. And the firm had been their CPA for years. But we cost. Professional knowledge does cost. We don't always know things off the top of our head. We are going to ask you questions. It does take research. So in their mind, they were saving 8 to 10 hours of consulting fees. But by the time the transaction was done, it was done. There was nothing we could do to change the fact that there was a $665,000 charitable contribution that they could have had, but because of where their income level was, it did exist. It showed up on the return, but they had no benefit from it whatsoever. Had we known about the transaction on ahead of time, there's a way we could have structured the sale so someone could have gotten the benefit of that. And it just didn't happen because someone does not want to spend the expense of hiring a professional on the front end. And I get it, but we're talking about real money here. That is not a small amount.
No.
No, not at all.
A lot of house.
Well, just when it comes to most professions in general, I've just learned most of the time, it's just better to pay the professional. And you can mess up real bad and end up costing yourself way more money than you were even trying to save yourself in the first place to fix it. So that's just how it goes. I think, I don't know, maybe, and of course, like, I'm part of that, but we live in such a DIY society too, like, do it yourself. And a lot of that has to do with what people can and just cannot afford right now. And everything has just become, well, learn how to do it yourself. And what comes out of that is, oh, I heard this guy on TikTok tell me that I could do this with my taxes, so I'm gonna do it myself. And I just feel like after working like within the tax realm, which in general I never liked doing it myself, I always hoped that I would work a job so simple that it could just be done and by themselves, because taxes are so complicated. And I feel like I've always known that, and I know I can't DIY that myself.
No.
It's just not even possible.
I mean,
for
at
me.
this point, it's not even responsible for me to try to do that.
No, not at all.
I think the problem is you got a twofold problem. The people that know the rules are busy applying them for paying clients. And so we don't necessarily have the time or even the awareness sometimes, sadly, to go and educate the public or meet the public where they are. And then I think the other piece of it is definitely messages such as what the rich don't want you to know or what the IRS doesn't want you to know. That's much more compelling than, you know, if you have good record keeping, you can probably claim your deduction. Like, the actual truth is usually very, very boring and tedious, whereas the messages that get a lot of the attention are the ones that perhaps have little to no legs to stand on. They're not very truthful, but they can say whatever they want to because that's how lies work, right? And so that's what grabs people's attention, and that's what get the views and the clicks. And so that's why, I mean, there was certainly, they called it like cocktail party tax advice before social media ever even came along. So this sort of thing kind of existed before, but I think it's just been exacerbated by the advent of social media.
And what's also makes it such a challenge for people to get professional advice is that we as professionals do not like giving an answer at a cocktail party or anything because we do not have enough facts to answer your question. But you will hold our feet to the fire that we gave you the wrong information. I mean, the tax code is over 3 million words. That's just the code. That's not the regs. That's not tax codes. So when we don't have enough information, you ask us a question, and we say, and we caveat, I don't know, but you will take that as fact. The example I like to use is I have a client who their job is they're a development director for a nonprofit. So they work with a lot of very wealthy people, try to get funding, try to get contributions. There was a tax law change multiple years ago that was about how much of a charitable contribution you can deduct against your income, the 50% rule. But this is also she is a client of mine, not her client, she is a client. So she asked me the question of the tax law change. Hey, this 50% change, how does that impact us, et cetera? I said, it doesn't impact you at all. You make $150,000 a year. I am sure it is not your intention to give away more than $75,000 a year in charitable contributions, so this limitation isn't relevant to you. Okay, great. Happened to be copied on the email she sent to donors.
Oh my gosh.
Explaining, hey, you don't need to, whoa, stop. This has nothing, this is you, not them. This is a totally different set of tax facts. You've got to tell me what you're asking and why. You were asking for your tax facts, and you extrapolated that to a different financial group of people that this is very relevant to them.
Yeah.
It's similar to, as Alicyn was saying, when you see things in the media talks about what the ultra wealthy does. What does Bill Gates do?
Yeah.
What does Warren Buffett do? Or it talks about what the working poor does. All very relevant, but what does that have to do with the majority of the American population? Very little. It's like, well, Warren Buffett is not giving his inheritance to his children, so I don't think stop, what? Does that have to do with you? Warren Buffett has already paid for the education, bought houses, paid for weddings, established charitable funds for them. They are fine. Until you've done all that, do not skip a generation. That's not how wealth is built. It is not designed to skip. He's not actually skipping a generation. It sounds like he is, but that's because he's done everything in their life. But what you hear, and what you hear in social media, the cocktail talk, it's like, that's great. I still don't know what that has to do with you. How does this fit your particular financial facts? If it doesn't, then it's entertainment. It is not actually financial advice. Do you know? And I when I found this out, it killed me. What's his name? The guy who does the investment speak and hits the bells and screams and hollers. What's the guy's name?
I don't know. I know Kramer?
Kramer.
Yes.
Do you know who the producers are for his show?
I don't even want to know too.
The same producers from Jerry Springer.
You know, and that is a show, I tell you what.
It's entertainment,
Alright.
but it is not financial advice. It is not tax advice.
Right.
I will say, sort of to that point, like how your client, who was the director of the nonprofit, just didn't understand that there could be a difference between advice given to her versus advice given to her client, who was getting money from different people. Like, a lot of times when you hear people say, oh, well, my tax advisor lets me do blah, 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 or, well, on my taxes, we do blah, blah, blah. Even with clients that I've worked with for years who are very smart people, most people are fairly out of touch with their own tax situation. Not that they're not smart, not that they don't care, it's just tax is that hard and they don't do it every single day. And so when you hear someone else say, oh, well, I wrote off my car, they might or might not have. They may not actually know what they did. They may have just given a bunch of information to their tax advisor and signed something later, and they don't necessarily know all the details behind it. So even if you have somebody who maybe you think is in a similar situation financially to you, maybe it's a fellow business owner, just be careful taking tax advice from that person, because one small difference in your circumstance versus theirs will totally change the advice that is applicable and optimal for you. And it's still very, very probable that they don't necessarily know 100% of their own tax situation either.
And Alicyn is being nice. It's not, there's a small amount. It is a dramatic difference between your financial fact pattern and your peers' financial fact pattern. I don't even mean keeping up with the Joneses. Most people have gotten past, I need to keep up with the Joneses and what they're doing. But people are still comparing themselves to who they think are their peers. And they are not their peers. Who talks about their intimate financial life with anyone other than their accountant? And the example I use is two executives at the exact same company making the exact same salary. Their children go to the same private school. One can't figure out how the other one is doing so many different things because they live in the same neighborhood, they have the same job, their children go to the same private school, they have the same salary. But why does this other person have so much more disposable income? Well, yes, you all do seem to have this same fact pattern, but this other person, the down payment on the house was paid for as a wedding gift. They do not have student loan debt because their grandparents paid for it. Their children are in private school because the grandparents are emptying their estate and paying for the private school. They are not living off of their salary. This other person is living off of their salary. They're first generation. They now have student loan debt. They bought the house on their own. They have no assistance there. They're paying for the private school that their children have. And they're wondering, like, why does my peer, who they view as a peer, why are they in such a different financial fact? No one has these conversations together. When they vent together, they both vent about, oh, private school is killing me. Oh, this is killing me. But he's like, but he also has a boat and they vacation twice a year. And because these other expenses are not expenses coming out of their pocket. Right. But no, why would anyone ever have these conversations with each other? They don't, but they believe that they should be following the same generic tax advice that someone talks about as they're having lunch together, because they are trying to talk to who they believe are their financial peers.
Yeah. I'm going to segue into new money.
Segue.
Troy and I bet in a segue. So coming up on December 18th in Orlando at the Walt Disney's Four Seasons, we're having our New Money Summit, and we're both speaking on it. Could you just give us a little blurb on what your panel is going to be about?
Yeah, for sure. So Cecily and I both are longtime tax advisors, and we're also financial planners. We are passionate about other tax advisors becoming financial planners. We think it's just a natural fit, and we'd love to see more folks do it. There's not tons and tons of resources out there for folks that want to bring that area of help for their client base into their practice. And so this panel is designed to give the audience, the participants listening in, the opportunity to hear from a few different people who have done this and the different roads we've taken to get there and how it looks like in our practices, so that they can see what they like, what they don't like, and find hopefully some shortcuts and best practices and some brainstorming for doing it themselves.
That's a great summary, Alicyn. Thank you. I think, as you mentioned, the path to doing financial planning versus I'm doing tax compliance is a different path for everyone. And so having the panel discuss how we've each come about coming there. In addition to being a CPA, I'm also a CFP, Certified Financial Planner, and got that designation because there was just such a hole in the tax compliance piece of the industry in general. So I know my path to doing financial planning was not direct in any stretch of the imagination. The world cares about money. I care about people. I figure the more people that know about money, the better the world will be. So that's how I came to doing financial planning. It's these things impact your lives. Pay attention to them, and how do we get people to understand that? So my path was not at all direct. It was backwards, and there are other people whose paths was direct. This is what I know I want to do and why, and how do I get there? So you're absolutely right. Part of what the summit is, and speaking to other people in the different pockets of this profession, of how we can work together to not make financial decisions in isolation and get our clients to not make financial decisions in isolation, is value add that we all should be doing a better job of.
Love that.
Amen.
I'd say, well, Alicyn, do you want to close us out with why should anyone come to your new money panel? Why should they?
Absolutely. Yeah, I would love for folks to come. First, come to New Money. Just come to the summit. It's going to be great. I'm excited to be partnering with Western CPE and great folks there. Very much forward thinking in terms of helping the accounting, tax, legal industries with continuing education. So a lot of the presenters are just more forward thinking. We'll leave it at that. But definitely come to Cecily and my session. It's going to be really good. It's going to be very interactive. It's going to be helpful. It's going to be a shortcut for you if you've ever thought about offering financial planning to your clients. We're just going to lay it all out on the table in a very candid and helpful way. And we would absolutely love to see folks there.
Well, thank y'all for being here with us today, and we can't wait to see you in December again.
Awesome. Thank you, Anya. Thank you, Kaylee.
Thanks, guys.
Thank you. Appreciate the opportunity. This is always fun.
Yeah, good. Sorry, I know it's bedtime.
No,
It's bedtime for me too.
bedtime.
So.
My mom used to say bedtime for Bonzo. I don't know what that means.
That sounds familiar. What is that? Is that from a TV show? Movie?
It's a movie.
A movie? Is it really?
I just thought my mom was saying it.
TaxSnax is brought to you by non-tax experts just like you.
So thanks for watching. Thanks for listening. Catch us next week where we'll be eating more food, talking to more experts, and where we'll decide, should I buy a polar bear?
Why would you do that?
Because they're cute and cuddly.
Well, in the meantime, make sure you take no tax advice from fake tax experts online.
Or us, unless it's in this podcast.